Happy Tuesday. Let's see who's going to join me today on today's live. So pretty much when it comes to, being in business and dealing with the IRS, there's a lot of education that small business owners need to be able to understand how to protect themselves during an IRS audit, or how to basically keep their tax deduction. So pretty much what I would say is, there's two processes, or there's two things to be aware of when it comes to you being in business and taxes. Is one, the first step is filing, and then the second step is waiting to see if your return is going to get pulled for an audit. Why is my ear scratching me? I don't know why my ear is scratching me, but anyways, thank you guys for joining. Hi Erica, hi Jen. But the thing is, the reality of it is, when you're in business, you're 400% more likely to be audited. And the only reason this is true is because once you become a business owner, there's no checks and balances on the IRS side to say, okay, this is your income, this is your expenses. When you have a job, it's a more easier task, because you have someone that's filing a W-2, you have all these other forms that you receive to file your tax return, which the IRS has a copy of. When you own a business, you come up with your income and your expenses, and then you report it out to the IRS. So an audit is basically them checking to say, hey, the things that you report on your tax returns, these are true business expenses. That's all an audit is. So pretty much, your accountant, your CPA, your tax attorney, they can't prevent you from getting audited. And a lot of people believe that once they file a return, that's it. But the reality of it is that you file a return, the return gets accepted in a normal process. As long as your EIN, your social and those little things matches, then the return will get accepted, and you will also get a refund. Michelle, thanks for joining. You will also get a refund. But the thing is, they have up to 3 years to go review that tax return. So normally, if you get audited, you're going to get audited for 4 years, 3 years behind, or 2 years behind. So in most cases, when someone gets pulled for the audit, they'll like, okay, we're going to review tax year 2015, 16, and 17. And they'll push a lot of years into it to basically cover it, because the statute of limitation is 3 years, so they have 3 years to go back and review your return. So what's the reason why people will get audited? A lot of times there's no specific reason. A lot of time it's just because you're a business owner, you report business income, so it's your time to go to them and say that all the items I report in my tax return are true business expenses. That's all they want you to prove. So it's getting audited and proving that your income and expenses are true business expenses, and the only way to prove that is through documentation. That they're very big on documentation. So even though times has changed a lot, there's a lot more electronic process and so forth, but the IRS audit process is very much old school. I've represented clients in audits. I've been through large corporate audits back when I was in corporate. I've been audited before, so it's extremely old school. So, receipts, canceled check, documentation, you really have to be on point with these items. And what I find with small business owners, they don't know what to keep. I hear a lot of people say, well, I charge items, on my debit card or my credit card. And then I'm like, I hope you just don't get audited, because your credit card and your bank statement just prove that you're the one who paid for it, or your business account is the one that paid for it. But it does not prove that it's a business expenses. You do need those invoices, and you do need those receipts that have the correct description as well. take for example, if coaching is big business. Business coaching is a big thing these days. If you have a business coach and your business coach sends you an invoice and you paid it, if your return gets pulled for auditing and they're like, okay, who did you pay this, $10,000 fee to? You're like, my business coach. If that invoice doesn't state specifically that what they help you with, you're not going to get that deduction if you get audited. So looking at your invoices and so forth is very important, because when you have vendors, and the thing is, a lot of coaches and people that we do business with as small business owners, they don't really know the rules, so they'll send you invoices and so forth, just not knowing that their invoices has to have more detail in order for you to be able to claim those deductions. So deductions like that will be disallowed. So you have to make sure that when you're getting invoices and receipts from any vendor, any consultant, anyone that you're using, that it states a specific thing. Nothing on there should assume that it's personal. Nothing on there, make sure that everything has the word business on there and have a description of what they help you with, so that you'll have an easier task to be able to keep your deduction. So one of the biggest risks is basically that you're going to lose a deduction, because basically what happens in the audit is you go and provide a documentation, say, these are the areas that you want to examine. Let's see who else is on. Thank you guys for joining. You provide a documentation, then they will compare it to whatever is on your return. They'll add up all the information that you have documentation for, then they'll make an adjustment to what expenses they're going to allow, what expenses they're going to disallow. And based on that documentation, then they will say, okay, we're going to remove your mileage because your documentation was not sufficient to prove that your mileage was for business, or we're going to remove your meals and entertainment deduction because your meals didn't you weren't able to provide to prove that these were actual business expenses, or they'll tell you exactly what they're going to take out. And if you're not able to come back and say, okay, this is, why I think that these are legitimate deductions, and be able to prove your case, then they're going to give you how much additional taxes that you have to pay. And that's pretty much what the big risk is in an audit, that you're going to owe additional taxes because they're going to remove deductions that you've already taken 2-3 years ago. And as I said, that normally when they come to audit, they're not going to audit 1 year, they're going to lump 2-3 years audit, because since they have 3 years, they're going to go back a few years. So you have to do the same thing for 2015, 2016, 2017, and then they're going to make an adjustment for those years. I have situation, I've heard that there's some people, there was this one lady that I was speaking to, and she got audited. She has never made even $100,000 in her business, and she owed over like $100,000 in taxes to the IRS because she was not able to provide any documentation for any of the expenses that she has. So simple things like that can just basically increase increase how much taxes you owe, even though you feel that these are legitimate business expenses, but the proof is what you need and the documentation is what you need. So I said, there's certain things that can definitely trigger an audit. For most business owners, there's not one thing specific that trigger an audit. For most times it will be, like, for instance, if you have like large swings in income, then they want to go check out what's going on, because they may be afraid that you've never claimed all your income, or maybe you're doing something illegal. Trust me, they're old school. So large swing in income. Hi Sherry, how are you? Large swings in income can cause them to audit you. Large expenses, like for instance, if you've never reported income on your tax return for a certain period of time, then that can create an audit, because they really want to check, does this person have a business, or do they just have an audit? Because the IRS expect you to make money if you're in business, right? So they'll want to come audit you. People would have like a lot of rental properties and so forth. They'll get audited because they want to be able to prove all those, you know, expenses that they're writing off based on their rental properties. So there's like certain things that can trigger an audit, but those are based on, you know, large swinging, you know, high amount of losses and so forth. But from the general, why most business owners get audited, they just pick, you know, 5 or 10 expenses and say, hey, we are going to go ahead and examine this for these years, and you come with your documentation. They're going to tell you exactly what numbers they're going to examine, and then you just have to go ahead and provide the documentation for it. And those are most of the ones that I've seen, that, you know, they just want to take a look at a lot of, you know, expenses. There's some expenses that will always get picked. Your mileage is going to, once they decided to audit your return, your mileage is going to get picked. Your meals is going to get picked. Your business use of home is going to get picked. So a lot of those expenses, they're just going to be among the few that they want to take a look at. And the reason why, and if you know, even speak to anyone at the IRS, the reason why is because they know that you're not doing it correctly, and it's an easy adjustment. It is such an easy adjustment that even sometimes when I'm working with business owners, like, it is such an easy adjustment, I can tell you, because most people don't know what it's required. And then now in 2018, with the new tax law, every time you have a tax law change, you know, compliance goes down because no one knows what to do. So we're going to see some increases in, you know, audit adjustments and audit notice for 2018 tax return. But anyways, why do people get audited by the IRS? A lot of time the IRS just wants to come and check everything out and see if you're really doing business, and if what you're claiming on your return are true business expenses. It's just an examination. It's up to you to prove, you know, what they're thinking. It's up to you to prove that it's true. That's to provide the evidence that it's true. Anyways, I want to be able to provide as much information as possible on this topic, because I know that, you know, a lot of, you know, small business owners, so whether you're new or you're an existing business owner, I know that a lot of people don't know what type of information that they should be saving. There's a lot of misinformation out there, so I want to make sure that you get the information that you can, you know, protect your business deductions, and basically don't have to overpay in your taxes because you didn't have the right documentation, because there's never an excuse for ignorance, right? So I want to make sure that you have the information. So I will be giving away a free download of my 2018 IRS documentation guide for all these different expenses that basically outline what information that you need to keep. So I will let you guys know when that's ready for download, and we'll go ahead and send it to you. But in the meantime, I will continue to give you as much information as possible on what process you need to have in place and what basically they're looking for, so that you can basically start keeping proper documentation and keep your deductions if you get audited. Don't overpay, and basically don't be scared if they send you a letter, because now you're gonna have the peace of mind that you have everything that you need to know, so that, you know, you don't have to be scared or losing sleep or anything like that, or owe them hundreds of thousands of dollars just because they disallowed your expenses. But that's it for today. I'm gonna do a next one on other documentation requirement, and as I said, that I will let you know when that free download is available. If you wanna be on the list to get it, you can go ahead and comment on this video, and once it's ready, I will go ahead and send it out to you. Have a good day.